Hello everyone, it's Davide here and welcome back to Learning Finance. So just a quick update on Bitcoin, Ethereum and basically the cryptocurrency situation to end our crypto saga that basically I've been talking about since Sunday. I have warned you about this possible scenario. Okay, if you have seen the video I released on a Sunday, we were basically about $47,000, and I told you that look, be careful now because the end of the annual cycle is coming. I give you a time horizon from the 20th of May to basically the 7th of June, and guess what? Today is 19th of May, so it's kind of funny, but well, one day before that, anyway, that basically tells you that, especially when it comes to Bitcoin and crypto in general, the cyclical analysis and technical analysis are extremely significant. Obviously, I received some FUD comments on some of this kind of stuff like, well, you know what, this is just FUD, buy the dip. Yeah, guess what? Okay, so today's Bitcoin is down significantly and obviously even more everything else. So you have Ethereum 32% down at the moment. Then also ADA down 30% at the moment. Uniswap 39%, Binance Coin 37% at the moment, and then Dogecoin minus basically 37% at the moment. You see how it's interesting if you go to check the video of Sunday. I pointed out this descending channel and I told you, look, as long as it doesn't break above that, don't buy because it's extremely risky and basically the likelihood to move lower is very high. Clearly, guys, I mean, when I told you that, not because I like to put FUD and all this kind of stuff, but because I saw those things in 2017, okay? So crypto, they like to do the same stuff all the times. Now, buying the dip now, yes, I explained to you yesterday, however, is extremely risky when it comes to buying the dip in this particular scenario. You can do it. So yesterday I gave you the targets. So we have 38,000 over there, hit. Then I gave you 34,000 over there, which is where the price is trying to bounce now. And then I gave you the extreme one, 28,000, which we were very near. Looks like as of now, the market is finding support over there. Now, you can do it. I explained to you yesterday. What is the risk? The risk is that if during basically today, at the end of the day, the market doesn't try to eat this candle back a bit, okay, so to form a shadow, come near to the 200 moving average, try to recover from that, well, it's risky going forward because this is very deep. I told you that, look, the risk is that if it falls too deep below the 200 moving average, the risk is that here we made another all-time high and now it will take a while to be back there, okay? In 2017, it took 2 years. So this is the risk. At the moment, we are below 15% at the moment of the 200 moving average. We went down until almost 25%. Now, what you want to see is a sign of strength here, okay? So a reaction, something. Because if it closes a red candle like that, okay, so if it closes below 34,000 without giving any sign of a recovery, then the likelihood that the next cycle will be a bearish one, and so this be an all-time high for a while and do something like that, okay? So use the 200 moving average and basically the 40,000 level as a resistance and then continue to move lower in the coming months. This scenario, if we close that dip, is extremely likely, okay? Something like we have seen in 2017. So this is the risk. I told you in the video yesterday, and today actually I got an instant confirmation about that. So be careful. You can do it. The levels have basically been hit, but be careful because now, obviously, this is the end of the annual cycle. Okay, we cannot deny that. This is what Bitcoin does when it closes a cycle. It goes crazy. Okay, it always done like that. If you go back in the past, annual cycles have always done like that. But the problem is that after this cycle, there will be another cycle. But if we go too deep, that other cycle will have a lot of road to cover. And clearly, the deeper we go, the more likely is that this will continue to remain a all-time high, and we will not be back here soon. Okay, so buy the dip, yes, but we want to see here a sign of a reaction. Okay, it looks like the market is trying to do that. Just buy the dip if you want, but remember, it's risky. I'm very curious to see how the day will close. On the Ethereum as well, we have obviously had the same stuff. The levels that I gave you was basically here around the 2,600, 2,500. We have destroyed those levels, and the market, it looks like that found a sort of a reaction here around the 2,000 level. Okay, very close to actually the previous lows that we did on the 18th of April. Now, once again, the market here is trying to push back up by the dip. Well, yes, okay, but remember, go to check the video I made yesterday. Here we still have the same risk. If the market is not able to pull back and eat back a decent part of this candle, if it closes too deep, then the likelihood that this will remain an all-time high for a while, it's very likely. So yes, guys, if you want to risk the buy the dip, obviously do it. We have reached the levels that I talked to you about yesterday. Remember the risk, because the close of today's candle will be extremely important. Okay, extremely important. If we close, in my opinion, below 34,000, so we don't eat back this candle a bit, is going to be problematic moving forward. So yeah, obviously do it, but be careful, okay? You have to act a little bit more as a trader, in my opinion, in these situations. So what I mean by that is maybe have in mind some exit strategies if you see that the market doesn't recover, okay, or it goes down too deep, because the next cycle, yeah, we start strong. Anyway, we start in a positive way, as always does, but if we close too deep, well, it will very likely not be a bullish one. Anyway, as you have seen, this is not magic. I made the video Sunday because I was really very confident about that scenario. I hope I have helped someone with this analysis, and probably I hope I have convinced all these kind of people that were telling me that I was a fodder. Okay, no, I was not a fodder. I told you I am in this market. I follow the market since 2017, so I have seen some stuff going on, and those kind of stuff happens all the times. So well, I hope you find the video interesting, guys, and leave me a comment below. Tell me what do you think. Subscribe to the channel if you want, and as always, guys, have a wonderful day.